And it's our pleasure to welcome Andy from Mortgage Choice. Hey, Andy, how you going?
Yeah, good. Thanks, Peter. Yourself?
Good. It's good to have you on the show. I know we had you on when you first started with Rob down there at Mortgage Choice. Is that right?
Yes, that's correct.
You haven't been back since?
No, I don't think I have.
So
Actually, no, one other time.
Oh,
Yes,
yeah?
I was back one other
So
time.
how's
yes.
it? How are you settling in? How long has
Yeah.
it been now?
When was it? It was March. So we're
Wow.
about 8 months in. So
Was
7,
it
8
that
months
long
in.
ago?
Yep. Start
Time
of March.
flies when you're having fun.
That's right.
Are you enjoying it?
Yeah, no, loving it.
Yeah?
So, no, it's going really well.
That's
So,
good. So you're standing in for Rob today because Rob's on very important child-minding duties with his
that's
family.
Exactly right.
Because his beautiful daughters got married. Is that right?
That's correct.
Yeah, he's looking after the grandkids. He was telling us last time he was in. So
All 6 of them.
yeah, there was a few of them,
there is
wasn't
a
there?
few.
So
He'll have even less hair by the time he comes back.
is that possible?
Yep.
So we're talking today about some helpful things to know when going for a loan. Is that right?
Yeah, that's right.
Yeah,
Yeah,
this
I thought
is an
I'd just
interesting topic.
strip it back to basics because sometimes our listeners don't always realise different things when they're going for a loan. So if you can actually have that knowledge beforehand, it can then help you set you up
100%.
going for a loan. So
I had a conversation with my daughter. I'm not sure if I've shared this online before, but she's just moved back home. She's mid-20s, ended a long relationship with her boyfriend, and during that process, they got a little bit into financial trouble. And so anyway, she ended up with a default that she's had removed because it was actually put there in error, but they were in some financial trouble. So she was so excited on the weekend because the default's been removed, but her credit score is still really low because of all the credit inquiries when she was going from payday lender to payday lender. So it's this kind of stuff, isn't it, that you're talking about today, that sort of says that just because she's thinking, oh, this is great, now I can go and buy a car, so I can get a loan for a car, and I've looked at her credit score and I go, unlikely, girlfriend.
That's right. So yeah, there's lots of things that can really be a handbrake when it goes to lending. So
what are the main things that banks are looking for when you're going for a loan?
yeah, well, there's obviously after two things when you go for a home loan. They want to see that you've got a deposit of some sort. So whether that's through...
Oh, what you mean I can't borrow 100%?
Well,
No.
but they
And the
are through
stamp duty.
family guarantees, aren't they now?
Yeah, but you still have to have hurt money.
Yeah, so
Still
we'll
need
get
some
to that.
form of-
But yeah, look, yeah, so they want to see a deposit of some sort. So obviously they need that, but also to be able to service the loan. So to be able to have cash flow, to be able to make the repayments from week to week. So they're the main two things they're looking for, because a lot of clients, they come in and think, oh, I've got all these assets,
Yeah.
but an asset can't make the repayment.
Yeah.
It's
Or I've got this great job that pays good coin, but I've not got any capacity because I've been living at home with mum and dad and spending all my money. And
yeah, and there's other things like, so for instance, what was that next question I had there?
what things can affect serviceability?
Yeah, exactly right. So there's like credit card limits. Like some people don't realise that, they've got a 20 grand credit card limit.
Yeah.
But it's about, for every $1,000 on your credit card limit, it affects your borrowing power by about $4,000 or $5,000. So
Yeah.
if you've got a 20 grand credit card limit,
Yeah.
then even if you pay it down to zero, that affects you borrowing $80,000.
Yeah.
So there's those.
Which is huge when you're talking about a market. The
For
difference
sure.
between spending $500, say, and $600 on a purchase property.
That's right.
Is there somewhere for 500 now?
Well, a unit. I was thinking more, kind of like, first home buyers and things like that
Yeah.
that have, just entering in, that have got these massive credit card limits and.
That's
you know,
right.
yeah.
So there's credit card limits, there's leased vehicles. That's a big problem because when you include the leased vehicle with the maintenance fee, like it can be up to like $1,500 a month. And that's really chewing up a lot of your
And people
serviceability.
think because they don't see that money that it's excluded, don't they? Do you find that?
That's right, exactly
like,
right. But no,
no.
that's a liability. The banks take that into account,
Yep.
and that can really, really affect your borrowing capacity. So particularly with the change in laws with leased vehicles now, it's just a flat 20% sort of thing. So there's no real benefit to leased vehicles.
No.
particularly from a borrowing point of view, it's really a negative thing.
Yeah.
So that's something to keep in mind. Also, personal loans, car loans, obviously repayments on those, they can affect. There's HEX debts. If you've been to uni and then all of a sudden you're earning above the $55,000 or whatever it is, the threshold, then
Yeah.
they're all
repaying
eating up your capacity.
Yep.
There's maternity leave. If you need to think about that. If you're going to go on maternity leave, you need to have
And
funds
think
to
about
cover.
it prior to conception would be great.
I thought prior to purchase also.
But then you've spoken about other things like defaults, not paying phone bills or, existing home loan bills or, and so when you have this credit I had another client that didn't realise he was checking out which credit cards he could go with and limits, and every one was an inquiry that went on his credit score. And obviously if you've got a low credit score or lots of inquiries in the last 3 months, the banks get nervous thinking they're scratching for money,
Yeah.
and so, there's a problem somewhere. They're looking
Yeah.
for quick cash and they tend not to lend.
Yeah.
So all
There
these
was a
things
thing
you need to
I
be
think it was
mindful
last
of.
week they were reporting in the media about stuff like that with the, I think Ross Greenwood was saying, which I thought was just a bit of a rubbish article, but the nuts and bolts of it were that where banks are going to start giving you a better interest rate if you've got a better credit score. So, I mean, I think it's always been there. If you're an A-grade client, they're going to bend over backwards to get you on their books, as opposed to someone not so. But I think with the way we do credit reporting these days is it does give the banks, and will continue to give the banks, more information about what goes on behind the scenes. Because even you've probably noticed whereby now the banks are wanting to see statements on your transactions.
That's right, yeah. And that's where it really pays to see a broker, because
Yeah.
a broker can sort of pre-qualify you without lodging a loan application. So if you go for a loan with a certain bank, they've got one policy, maybe 2 or 3 products, and if you fail with them and then go to another bank, every time you go, it's going on your credit report. So
Yeah.
whereas a broker will have a software package that can sort of analyse that, work out which lenders will lend to you, and sort of, make an informed decision rather than getting another
Okay,
credit.
the two of you are talking now about things that
excuse
maybe
me?
people might be interested to know where they get their credit score. Like, so, because you're saying about know what your credit score is and defaults, but, because quite often I get people asking me, how do I find out? How do you?
Well, Veda credit scoring is probably the most popular one out there. So, you can just go online, VEDA, and you can sort of get
and
a credit.
what does that do? What does it analyse?
It gives you a copy of all of the inquiries that you've made over the last sort of couple of years, that whereby you've applied for finance. It still doesn't say whether you've been approved or declined, but it just says that you've applied. So like what Andy was saying before, if you've had a lot of inquiries in a short period of time, that gives the bank or the lender a little bit of instability about you as a client, because why are you doing that? Are you scratching for money, or have you been declined on numerous occasions? Or is there something hidden that you've learnt as you've applied 3 or 4 times not to disclose? So it just makes the funder or lender or bank or whoever it is quite nervous about you as a potential client. So it is really important.
And is that free? Like, what do people have to pay for it?
They can get it. If you want it instantly, you pay for them. But if you wanted to wait 30 days and they send you out a copy, you can, but don't go to one of those loan sharky, people. Just, sort of do a proper Google search. And I think Veda's now called Equinox. I think it's merged into some other funder. So, but have a look at that, and then it spits it out into a score. And you obviously want to be in the green section.
Yeah. So, if you're sort of above 700, 750, it's sort of you're on a pretty good score sort of thing. But they hold your credit inquiries for 5 years. So so it's something to think about, particularly like I said.
And what about if you're a sole trader or in a partnership? Is it a different type of inquiry? because you might have business debts.
Yeah, generally your credit file as a person will actually show if you're a director or if you've got any of those entities sort of attached to you, and then you could go and get a report done on more so not sole traders, or I don't even think partnerships, but definitely company directorships. I had a lender come back to me last week for the question a client had 4 directorships from back in the 1970s. And they wanted to know what that was about. So that stuff definitely shows up in
Yeah, I had one, but unfortunately the lender is a bit stupid because it's called a charity.
Oh. Well, it's not that. It's usually the credit assessors with limited knowledge. So, but Andy, what are some of the other things that affect us in relation to being approved for a loan? Like, potentially how much deposit have I got?
Yeah, okay. So look, usually there's a minimum of 5% deposit, so that, there'll be lenders that will accept that. But to get the better rates, you really want a 20% deposit or more. So that we talk about an LVR, which is the loan to value ratio. So the size of the loan divided by the value of the property will give you the LVR. So basically, if you've got an 80% LVR, it means you've put in a 20% deposit, and that will get you the better rate.
Yeah.
Now, if you haven't got 20% deposit, then you can look at doing family guarantors and different things like that. That can obviously help you to gain a better rate, but also have the deposit to make the purchase. But sometimes there's the necessary thing. If you don't have the money, you might have to put in 10%, pay lender's mortgage insurance, and if that meets your goal of buying a house, then so be it. Sometimes it's a necessary evil.
But I guess it just, again, doesn't it? It alludes to the point that why wouldn't you go and see a broker? Because the broker understands this bank wants 5, this bank will let you have 10, this bank, what if you have a look at it? And, just through conversation.
Exactly right.
Broker can advise you.
Particularly when you can leverage off their expertise and knowledge for nothing.
Yeah.
Like it doesn't.
I know, it's a no-brainer.
To see a broker costs you nothing. Like most people don't know that. But and we can understand what's happening with rates. Like for instance, at the moment we're seeing owner-occupied rates are sort of coming down, mainly because I guess the investment lending had that cap with APRA and ASIC, and so banks want to still get some market share, so they're trying to get more owner-occupied business going. So it's something that I guess when you see a broker, they have that inside knowledge, but also can point you in the right direction. Even if you can't borrow now, they can give you some tips, on how to prepare to then maybe get a loan in the next 12 months to 2 years.
Yeah, perfect. And I think it's really important to understand too that although, like you said, generally it's a free service to see a broker, and but don't get hung up on the fact that a broker earns commission, because the commission, particularly with Mortgage Choice, it's flat across the board. So it doesn't matter whether you're sending them to Bank West or CBA or St. George or Teachers Credit Union. The goal is to actually get your customer a loan, get them approved, and that's how you earn your money. So, it's not something to be frightened of.
No, that's right. Exactly right. And look, it's just... it's one of those things. You're paid for service,
that's right.
But the good thing is that the banks pay us for the service, because we're getting them some business. But I guess that's the good thing about Mortgage Choice, is it takes out that conflict of interest. We get paid the same. So,
it's good. Fantastic. Well, Andy, if somebody wanted to chat to you about potentially getting themselves in the right position to get a home loan, where's the best place to find you?
Yes, well, you could call me on 0427 157 329 or email andrew.manuel, Manuel, at mortgagechoice.com.au. So,
perfect. So they can call in down there at Blaxland.
Or the Blaxland office, behind the shops there.
Perfect. Well, thanks so much for stepping in for Rob. It's been great to have you. I hope things are okay down there while the captain's away.
No, we're all right. We're having lots of fun while he's away. And
I bet. That's great.
Plenty of parties,
They've closed for Melbourne Cup tomorrow.
That's right.
Why wouldn't you?
Thanks, he's been ringing and checking in already.
Has he? There you go. Rob, just watch the kids. Don't worry about it.
Yeah, just relax,
You're in good hands. Well, that's great. Thanks so much, Andy, for coming. And hopefully we'll see you again, probably not before the end of the year, but next year sometime we'll get you back.
Thanks for having me.
You're welcome.